don't know what you think the probability is of Iran actually doing what they've threatened to many times before and never have done, choking off the strait entirely. But do they have potentially just as disruptive secondary options available to them when we think about all of the energy infrastructure in this region?
It's great. Yeah, no, thank you. It's great to be with you. I think Iran will be very cautious and careful about attempting to fully disrupt the 18 to 20 million barrels a day of oil, 20% of traded LNG that goes through the Strait of Hormuz. They could do it. They have the military means to do it. But I think the secretary's right. They'll be reluctant to do that. It would be suicidal and self-harming. As you noted, they have other options. In September of 2019, they did a demonstration attack on the most important energy infrastructure in the world, the Saudi stabilization plant at Ad Cake. And that Sunday, we had the biggest open ever in Asia. We hardly see that right now. So they could also have proxies harass or attack ships here and there without a full-blown attempt to disrupt all of Hormuz traffic. So they have options to flash, if not play, the oil card.
Really interesting, Bob. You were with us a week ago tomorrow, setting the table for what was about to happen here. You talked about these possibilities, and we've seen oil behave pretty well since then. Is this market whistling past the graveyard, or is it in fact pricing in the risk that we're facing in the next couple of weeks?
Yeah, Joe, no, I think we see an oil market that, as we discussed, is pretty inured to geopolitical disruptions in oil markets. Over the last few years, we've had several false alarms. The Russian invasion of Ukraine being one, and Israel and Iran's exchanges last year being another. Then oil prices spiked, but there was no disruption, and they sold off. So traders are starting to think, there's nothing here. And so I think, look, we're up $10 a barrel since the war started, now a little more. And so I think there's appropriate amount of risk in the market right now. And as you said, traders are sort of holding their breath, waiting to see if Israel, Iran, expand this conflict beyond military and political targets into traded energy. So far, no one's pulled that trigger yet. And if they don't, I can see the price kind of reversing.
Well, so when we consider that, Bob, what kind of spare capacity elsewhere that doesn't have to navigate the Strait of Hormuz or potentially is vulnerable to any kind of Iranian retaliation is there out there for other oil producers who may be able to make up some of the gap at least?
Well, the problem is all of the spare capacity in the world is inside the Strait of Hormuz, mainly in Saudi Arabia, UAE, a little bit Iraq and Kuwait. Now, there are some options to redirect barrels around the Strait of Hormuz, but it's not a lot. There's the East-West pipeline in Saudi Arabia, about a 5 million barrel a day capacity. Now they're using a little bit of it now, so maybe they can push 3.5 through that. UAE has a new pipeline, Habshan Fujairah, maybe a million or so through that. So maybe you could, out of the 14 million barrels a day of just crude, not products, but just crude, maybe 3-4 million barrels a day could be redirected around the Strait of Hormuz. But in terms of spare capacity, the bad news is it's all in the war zone.
Bob, you famously helped George Bush refill the SPR. And as we consider the potential need for the Strategic Petroleum Reserve here, if in fact this became a protracted conflict or we saw a massive interruption in production or supplies, what kind of a situation would we be facing with an SPR that's half empty?
Yeah, I hope and I expect there's a lot of, reconsideration of the wisdom. And both parties did this initially of selling down the SPR, as you noted, and then President Biden spilled about half of it for no good reason, really, after the Russian invasion of Ukraine. So here we are at a little over 400 million barrels. So we have half the capability that we would otherwise. And we're the biggest strategic stock holder in the world after Japan and Germany. So look, I think if we saw an interruption, there would be a coordinated stock release between us and our IEA partners, International Energy Agency partners. But we could maybe do 2 million barrels a day. But again, there's the math problem. We have 14 million barrels a day of just crude, another 6 or so of products. And, that's only going to make a dent. So it's unfortunate. And hopefully, if there's a silver lining from all this, Joe, from an energy policy perspective, there will be a bipartisan reconsideration of the wisdom of letting down our guard and our defenses.
And finally, Bob, knowing that you know the Gulf states quite well, they obviously have not reacted positively to the U.S.'s decision making here. What is their greatest concern right now? What role do you expect that they will play in what happens going forward?
Yeah, the Gulf countries are very concerned that the war will expand to include attacks on key Gulf infrastructure, Abqaiq, Khurais, Ruwais, other big terminals, refineries. They're all there in close proximity to Iranian weapons they still have, and they desperately don't want to see this conflict become a general conflict in the region. And so they're very worried, very concerned, laying low. OPEC Plus is not changing policy. From an energy perspective, I think their message is we're going to stay with what we're doing. We're going to lay low and hope this blows over.